Hey, it's Jack from Alpha Charts with a state of the market video. Today is September 16th, 2023. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, thank you all for watching the video. If you haven't yet, please like and subscribe on YouTube. It really does help me, and I do appreciate everyone that has. Thank you. If you like my stuff, you could also check me out on Twitter at AlphaCharts365. I post things all week long. I think pretty interesting stuff, mostly market related. And then if you really like my stuff, I have a subscriber group. It's $10 a month. But I have a stated goal of keeping you on the right side of the market and in the best names possible. I do multiple market notes every single week. I do multiple videos. Again, all this just for subscribers. I do a focus list video that's a little bit shorter, but to the point. Chart requests and things I'm looking at. Again, I share it just with subscribers all week long. I don't tell anybody to buy or sell, but if they send me a chart or say, hey, look at what do you think of this name, I'll mark it up and say what I think. My goal is to help you maximize your profits while minimizing risks, on the swing trading time frame. So it's all for $10 a month. It's really an amazing deal. Less than one fast food meal a week. You know what I'm saying? Basically one less than one fast food meal. I mean, it's the value there is immense. And we basically got long at the end of May, beginning of June. We ran up really nicely at the end of July. We started to get, defensive again. And I've been talking to my subscribers about staying defensive basically since then. And it's not easy to have that patience, but that's what we have to have sometimes. Again, that's what I try to provide, that guiding thread for people, just to have somebody to bounce ideas off of, just to have somebody that says, okay, am I thinking about this right? Am I looking at this chart the way, that's a lot of what I'm doing. And we don't realize how much sometimes we need that. So if you're interested, at Alpha Charts 365, subscribe. It's $10 a month, super cheap and really made for everybody. Great value. So all right, let's get to these charts. We have this S&P 500. There's our structure, and we've had this kind of consolidation, right? We're going to zoom into it. Again, you see the levels on the chart. And you can see how we now have kind of broken down from this bottom trend line. Again, maybe it's valid, maybe it's not. But then we also have basically this area that we're just kind of stopped on. Don't make too much out of this volume. It was quad witching and also index rebalancing. So we expect a huge volume spike. You don't read into that too much. But you can see how it's trying to break down. Again, any follow through to the downside, I think this 43-ish, 4,300-ish area is very likely, to get tested at the very least. And then you have kind of a nasty looking problem, maybe some kind of head and shoulders or toppy pattern, whatever you want to call it. On the week, surprisingly, only down 0.16. So that's something that's interesting, right? Only down 0.16 for the week. So not a lot of movement, but yet when you look at the daily, there was actually a lot of movement, right? Because we were up quite a bit and then we went down. There's some fake outs, whatever. So, but on the week, only down 0.16. Let's check out RSP, and only 0.05, right? So RSP was barely down too on the week. Now, RSP is the equal weighted SPX. But you can see, yes, it was kind of sideways, but we are testing that 200-day moving average on the equal weighted, way under the 50-day. By the way, SPX is under the 50-day as well. 50 days at 44.82, and we're at 44.50. So you see under a flattish 50-day RSP under, come on, sorry about that. If I could type, underneath a flat 50-day, well underneath it now. You see how it retested it and fell apart, right? So not a good look at all. Looking at the Qs, very similar look to the S&P 500. Again, we have the same type of consolidation. same type of break right into an area of potential support. Price is still underneath a flattish 50-day. That's a problem. And when you go back 50 days, you're going back here, right? So you see why it's flat, right? So flattish 50-day, we'll just zoom in there a little bit. Just kind of messed that up, didn't I? Flattish 50-day, and then, right. And so it doesn't look great, period. On the week, down only 0.5% though. Again, through the consolidation. Again, maybe this trend line isn't right. Maybe I need to adjust it. But if we break through this green area, you have a smaller area right below it here at 355-ish. And then you have a much bigger area at 330-ish or so. So just some structurally what I see going on there. Again, 0.5% on the weighted ETF and down 0.88, so a little bit worse on the cap weight, on the equal weighted, sorry. And then when we go and look at on the daily for the equal weighted Qs, again, you see how we stopped right here, and that was an important area. And when we kind of zoom into this area, big time breakdown underneath all the moving averages, flat 50-day, just not a good look, right? Not a good look. Where can we go to? Very likely the $73, $74, which was what we were watching and eyeballing back on the breakout, right? Back here, one of the things that got us a little bit more bullish was that equal weights were breaking out. And that was a good run, right? All the way to the end of July. Right. This is a great chart that shows, right? We got long here, me and my subscribers, ran it up, got defensive. Now, I won't say we got short, but we got defensive high cash levels here. And that's okay, right? Because it's tough to short. But high cash levels up here is save your account this. And even though hopefully you didn't get sucked in too bad here and save your account this. So whether we come back here and retest 74 again, I don't know. It's very possible. Pretty significant lower high. We're going to find out pretty soon, though. That's the equal weight. Now, IWM, which is equal weighted by nature, has been in this nasty consolidation now for years, basically, right? A year and a half. Even going back here, almost 2 years, right? Because you could even say that it, has not been above this area really significantly since the beginning of 2022. It is now retesting the 200-day moving average once again. And how many times can this thing test it for it to not hold? It's also testing the VWAP from this low right here, and also the pinches to the top would be the VWAP from the all-time highs up here. Okay, so that's kind of the pinch I have on here. Whether it holds, doesn't hold, I don't know, but it does seem to be respecting it for now at least. So we'll say it matters. On the week, down only 0.17, right? So if the week under the surface felt much worse than the actual movement of the stocks, but you definitely have, and look at the weekly for a second. I posted this chart on Twitter last night for everybody, but this is to me, almost like a potential. This looks more like a short setup than a long. Now, I don't know if it could just be the 164, but this is an ugly look to it, in my opinion. Very, very ugly look. Definitely not in the bullish realm at all. So small caps not looking good, and we have the mid caps again coming down to the 200-day. Hasn't quite tested it yet, but you have the flat 50, so there ain't much to do there. 0.5% on the week. Very much like the small caps. I see the 3 humps, and then here's your trend line. Again, none of these charts look great, right? They look very vulnerable to more downside movements. Let's look at the individual ETFs. XLF still can't get above the trend line here. Maybe it will, maybe it won't, but as of for now, it can't. On the week, I think they were up for the week, actually. Yeah, up 1.55. Definitely some outperformance in the financials. There's your trend line. Rejected it there. But again, flat 200-day. That just tells you there is no trend, right? Well, maybe if it breaks out of here and can start moving higher, that will change. But as of right now, there's no trend to be had in the XLF, but holding up, right? Holding up, not breaking down. So that's a positive. SMH, this is the semiconductors, and they were pretty nasty on the day, down 3%. I really don't think anything moves well if semiconductors are breaking down. That's really what we have. We talked about the false breakout here. We talked about the VWAP from the NVIDIA earnings. These are all things that you've heard here, which I offer, so far at least for free, and I'm sharing with everybody. That may or may not continue. I'm debating on that, but this is just a bearish look to it, and it's all breaking down. And the weekly down 2.37 on the week. Again, it's not a cup and handle. Don't let people start telling you, oh, it's a cup and handle. It's not a cup and handle. It just isn't. And this looks, again, very vulnerable. Maybe it's got a rendezvous with the 200 around 132-ish. Maybe not. But again, I think as an indicator, it's definitely put one in the bearish realm, right? I'm looking at the equal weighted. Again, it's at the 200 already, right? It tells you how much weaker, when you take NVIDIA out of the picture, it is. And it looks like it wants to start to lose the 200-day. It did it back here. And then we see we rallied very nicely from there, right? Again, another reason why we got bullish at the end of May was that this didn't break down and it did rally up, right? So right now but this looks like it wants to break down again. 50 days already going down. So the equal weighted semiconductors not looking good. Housing came back in again, holding on by a thread. This area, I think it may have a date with the 200 as well at the minimum. Again, a lot of selling pressure going on this one. So again, not looking great there. Even looking at XHB, which is some ancillary ones. Again, we talked about the rising wedge and not looking great here. Maybe it's got a date with the 200-day as well. It looks that way to me. Looking at transports, rising wedge, which we talked about. I think the 200-day is a logical next stop. We'll see what happens when it gets down there, but not looking good as well. So when you look at the sector ETFs, they're all, for the most part, either not breaking down, right? Financials are kind of going sideways, but everything else is breaking down. What does that say? That says that people are worried about, I think looking at 3 to 6 months, we may have some issues in the economy too. That those are kind of like economic, like my version of economic indicators. Those are flashing huge warning signals. We'll see if it continues or not, but the market will react to them, I think. And I think that is pricing in problems. That's what it looks like. Let's look at the internals and see if they are what they're talking about. All right, here's the VIX. So the VIX is still very, very low at 14, right? It just is not moving. Now, we've stayed this low before, right? Back in 2019, 2018, different environment though, right? This was a completely different environment back then. So yes, it could stay low, and you sometimes will see these snapbacks. Again, we're looking for a strong snapback, and above the red line, I think, is times where we can potentially, use that as a contrarian indicator. Because it doesn't stay up above the red line very often. See, this was back in 2010, 11, a little bit more, but really it doesn't stay above that red line. So that's a contrarian indicator that I'm looking for. Right now it's just consolidating here. So not really giving us a much of a warning sign. Looking at credit spreads, still super low, right? Again, we would expect when things start to unravel that they're going to get much higher. Again, they haven't broken down, but they're tight as hell right now and really just going nowhere. So we'll see if from this contraction comes volatility. It's done that in the past, right? Multiple times. So we'll see if this holds true or not. We don't know, but right now it's not, right? Put call ratio, 1 foot in the door, 1 foot out. No real extremism. It kind of tried to get there a little bit this week, but came right back in. So not extreme. And percent of stocks above the 50-day, you know what? They're at 33 and they're not breaking down. So what is, in my opinion, the internals aren't flashing crazy warning signs, but none of them are at extremes. And when I look at the internals, that's one of the things I'm really looking for. Extremish moves, because then you could use that as contrarian type indicators, or or however you want to. I don't see it quite yet, which makes me think that we may have a little bit more pain to go in the markets. And that's just how I'm reading it. Maybe that's a little bit of my bias in there too, right? We always have some bias that we have. Looking at the dollar, we're back in this zone where we have sold off in the dollar in the past. Will this time be different? We don't know, but I can tell you above 105.50-ish, and which is not that far away, it's, I think, a problem for stocks. And I think if we start to sell off, we're going to get some relief. So a breakout here could be, what we potentially get if we want to get to an extreme. We'll play it here day by day, but as of right now, I think that there's a lot of the dollar is a big factor on what's going on. Again, it's one piece of it. It's how we can visually see a lot of other moving parts that are all moving at the same time, right? And then look at the 10-year treasury, and this one looks like it wants higher. Can stocks and treasuries go higher together? Yes. The answer is yes. Is that something that it makes it easy for stocks to go higher? I would contend no. I think that some stocks are going to get hit worse than others if treasuries get up to 5%. We haven't seen that going to a weekly chart here. We haven't seen a 5% treasury yield in a long time. And how it gets there is probably more important than the number itself, right? If we get there quickly, right, very fast move up, right, very fast move up, I think that's going to cause people to be caught off sides on different trades and in different, they can't adapt quick enough, basically. If we go slowly and we stair step up there, right, more like this, I think that is going to help people, and it won't be as much of a shock to the system. So again, how we get there matters. Okay. Looking at copper gold ratio, just to be complete, it's still holding up in this range, so no real signal. I think above or below here kind of gives us a little bit of an edge. We'll see if it does or doesn't. It's more of a tertiary type thing, though. I don't hang my hat on what the copper gold ratio says. So let's tie it all up. SPX, come back here. We have this pretty nasty move on Friday, even though in the week it wasn't a move. Very likely, I think after a move like that we're going to get maybe some more push lower. This 43.20 area is probably the next real important area. We'll see what happens. I mean, it's only 2%, 3% away. Yeah, about 2 to 3% away. I think that's a potential area to consider, support. We'll see if that holds. If not, underneath it, yeah, obviously this 41.20 area. Okay, so not a time to be a hero in the markets. Right now it looks pretty weak, so just be real careful out there. If you haven't yet, please go to Twitter at Alpha Charts 365, and subscribe to my group. I think that you're gonna get a ton of value out there for $10 a month. Are you kidding me? It's the best deal out there by far. All right, so you guys take care. Have a good week.